In part 1 of this video, I had asked you a question, which is, if I give you $1 million right now, tell me how and where would you invest it? Hold on to your answer while we discuss about the remaining investment vehicles that we have, which brings us to equity and cryptocurrencies. Let's start with equity here. Now, what exactly is equity? This is basically your ownership in any organization, in any company. Let's say when you buy HDFC Bank share, you become a partial owner of that company. So there are thousands and let's say hundreds and thousands of owners, and you are also an owner of that organization. When that company grows, let's say has now more profit, grows in size, the stock price also grows, and that is how you earn profit out of it. That is called stocks. Now, if you are just new to investing, I would not recommend you to buy individual stocks because it's very unsafe. It's kind of risky because if you're not sure which stock to pick and you're not sure about the prospects of the company, don't do that. Do the second option, which is called as mutual funds. This is a really safe form of investing, to be honest. We keep saying it, mutual funds are risky, but they are not that risky. I'll make a separate video on mutual funds. The next video would be about talking literally all about mutual funds, which will just give you a lot of confidence in investing in mutual funds. But if you invest in mutual funds and you time the market a bit, then you can easily expect a return of 10 to 15%. But if you're a bit more smart and you invest bulk amount of money when the market is really at its low, then you can in fact even gain, let's say, 30-40%. I have disclosed my portfolio in the first video, and I shared how I also got almost like 50% returns in mutual funds within a year. And you can also achieve the same based on the market cycle. You just have to understand when to invest more, when to invest less. So it's a really good form of investment and very low risk, to be honest. Check out any random 10-20 mutual funds and you will see in the last 20-30 years they would have grown. You would have almost got like 10-15% of your return in that. If you invest in stocks, you can expect a return of 20-25%, but that requires expertise. You can only get that if you really know where to invest, if you have the conviction to hold those stocks. It's kind of difficult, to be honest, so don't get into that. Start with mutual funds. Once you have more knowledge of the market, then maybe dive into stocks. And the third option that we have, which is even more risky and very volatile, which is called as futures and options. Now here in this, I don't want to talk more about this. This is extremely risky, extremely volatile. I can't even give you the return that you can get in futures and options. In fact, even in India, it's almost like 90% of the traders are losing money. They are not even beating FD returns. So don't expect that you'll make crazy amount of money if you invest in FNO. Not even invest if you trade in FNO. So don't do that unless you're absolutely sure about trading and you know how to do it. Again, can't give you a number because it's very difficult to come up with a number based on your strategy. You can either earn 100% or lose all your capital. So don't get into that. The reason to invest in equities is you actually grow your wealth. You actually become wealthy only if you invest in these kind of assets. We talked about bonds and we talked about FDs where you get, let's say, 6-8% return. Inflation in India is almost 6-7%. So you're not growing money in real terms. But if you invest in stocks or mutual funds, you can almost expect 10, 15, 20% return. So you're generating this alpha of like say 10-12%. And in the first video talked about how this compounding works. It actually creates a huge difference if you generate 7% year on year versus 15% year on year. It would be a difference of almost like 5, 10, 20 crores if you see it in a time horizon of 10-20 years. So understand this, it's really important. If you are new to investing, I would recommend you start with FDs, just keep the safe money there, then also invest in mutual funds to grow your money, and then also keep some sort of your money in gold as well, just to hedge against the inflation. And also, you know, when the economy is not performing well, you would still be making money through your gold. And that brings us to the last part, which is cryptocurrency. Again, I would not even recommend you to invest in this because there are a lot of regulatory problems here. A lot of time governments ban this, but just understand what is cryptocurrency. This is basically a digital form of currency. You have a bank note, that is a physical form of currency, and imagine this, instead of this, a new concept has been coined, which is keep it digital. So that is called a digital currency, that is cryptocurrency, and works on blockchain and other technology. Don't want to dive deeper into that. Two major coins you would hear about, which is Bitcoin and Ethereum. You can earn a lot of money in this if you know, but again, very risky because a lot of regulations come into the picture a lot of time where governments try to ban this, so you could lose a lot of money again here. but they're going pretty well right now. You can invest some form of money if you have a lot of money and you have already invested in all these options, but don't start from it. Don't even consider buying any kind of cryptocurrency as of now. Just stick to mutual funds, FDs, bonds and gold. And if you have a lot of money, well, let's say you have almost like 50-60 lakhs, more than that, then you can think about buying a real estate, because now you have that money to pay up front, and then you can obviously get a loan and finance that property. Now this brings us to this end of this video. If you had already answered about where you would invest this $1 million, think again. Now that you know all these options along with the return that you can expect from all these investment vehicles, tell me, is your answer still the same, or are you reanalyzing and thinking about putting your money in different investment options based on risk and growth? I hope you found this video informative. I'll see you later.